Hey everyone, and welcome to our deep dive on Talabat's IPO. We're talking about a company that's really kind of poised to make a big splash in the investing world. I mean, just imagine getting in on the ground floor of like the next Amazon.
Yeah.
But for the Middle East, I mean, that's the kind of potential we're talking about here.
Yeah, it's pretty remarkable.
So let's dive right in. You probably already know Talabat as like the go-to food delivery app in the MENA region. But there's so much more than just another food app.
Yeah, that's right. What's really fascinating to me here is their evolution, from a simple food delivery service into like a full-blown quick commerce ecosystem. I mean, they're not just bringing you your favorite shawarma, they're aiming to become like the one-stop shop for everything you need, groceries to electronics, delivered right to your doorstep. This is a company that's thinking big, and that's always a good sign for potential investors.
Okay, so we've got ambition. But what about actual results? What makes you think this IPO is worth a closer look?
Well, let's start with their market dominance. Talabat isn't just playing in the MENA region, they're leading the game. They are the #1 player in online food ordering, delivery, and takeaway. In fact, they beat out the next largest competitor in each country they operate in.
Wow, that's impressive. But are people actually using it? I mean, market share is one thing, but customer loyalty is another.
Oh, you're absolutely right. And that's where Talabat truly shines. Let's look at the numbers for a second. 78% of food delivery users in surveyed countries prefer Talabat. I mean, that's a staggering number. And it speaks volumes about their brand recognition and customer satisfaction. Think about it. If you're craving a late-night snack in Dubai or Oman, chances are you're reaching for the Talabat app. That kind of loyalty translates into consistent revenue, which is what investors love to see.
Okay, so we've established that people love Talabat.
Yeah.
But what about this expansion beyond food? I mean, it's a big leap from delivering burgers to delivering groceries and everything in between. Is that really a smart move, or are they spreading themselves too thin?
It's a bold move, no doubt, but I think it's a calculated one. Remember, we're talking about a region with a rapidly growing middle class, high internet penetration, and a booming e-commerce market. Talabat is tapping into a massive $95 billion grocery and retail market in the MENA region. That's a huge pie. And they're positioning themselves to take a big slice.
Okay, so let's break down this diversification strategy a bit. We're talking about groceries, pharmacies, flowers, electronics. It's almost like they're building a virtual shopping mall in your pocket. How are they actually pulling this off?
They've got a two-pronged approach. First, they're partnering with existing local shops, over 9,500 of them, to offer on-demand delivery. This gives them incredible reach and leverages existing infrastructure. Think of it as bringing the neighborhood marketplace online. But they're not stopping there. They've also launched Eat Marts, their own network of delivery-only warehouses stocked with convenience products and groceries.
So it's like a ghost supermarket that appears at your doorstep, with everything you need in a flash. I'm seeing the appeal for consumers. But how does this translate into investor value? Is this diversification really going to pay off?
I believe it will. By diversifying their offerings, Talabat is reducing their reliance on a single revenue stream. They're capturing a larger share of consumer spending, and that's what drives growth and profitability. Plus, this expansion plays into their growth flywheel, a self-reinforcing cycle that fuels their success.
Right, the growth flywheel. You've got to explain this one. It sounds intriguing, but I'm not quite sure I understand how it works.
It's actually quite simple. More customers attract more partners. Restaurants, shops, T-marts, and more partners lead to greater selection and better value. This, in turn, attracts even more customers, and the cycle continues.
So it's like a snowball rolling downhill, gaining momentum as it goes. And we see this reflected in Talabat's stats. For every dollar they spent acquiring a customer back in 2019, they're now making 4 times that amount in 2024. That's a sign of a really healthy business model.
Exactly. And their cash conversion rate for the first 9 months of 2024 hit a remarkable 96%. That means almost every dollar of revenue is turning into actual profit. This efficiency is a key indicator of a company that's not just growing, but growing profitably, which is what makes this IPO so enticing for investors.
This is all starting to sound like a pretty compelling investment opportunity. But let's get a little more technical for a moment. What's the engine driving this impressive growth? Is it just savvy marketing? Or is there something more happening behind the scenes?
Well, marketing definitely plays a role, but the real magic lies in their robust tech infrastructure. They have over 480 tech specialists working across Dubai and Cairo, constantly innovating and optimizing the platform.
So they're not just relying on third-party tech, they're building their own solutions. That's impressive.
And they're not doing it alone. They have the backing of their parent company, Delivery Hero, a global powerhouse in the food delivery space. Think of it like having a tech-savvy older sibling who's always happy to share the latest gadgets and know-how.
That's a huge advantage,
Mhm.
especially in a fast-paced industry like this. But how does this tech advantage translate into value for investors?
A strong tech infrastructure drives efficiency, which reduces costs and enhances the customer experience, crucial factors for long-term success. Their connection to Delivery Hero gives them access to cutting-edge technology and global best practices, setting them up to stay ahead of the curve. This isn't just about delivering food, it's about building a scalable, tech-powered platform that can handle massive growth and adapt to changing market dynamics.
All right, we've covered a lot of ground here. Market dominance, diversification, a powerful growth engine, and a solid tech foundation. It's clear that Talabat's a company on the move, and this IPO is generating a lot of buzz. But we've only just scratched the surface. In part two, we'll delve into the specifics of their financials, revenue models, profitability metrics, and how they stack up against the competition. Stay tuned.
Welcome back to our deep dive into Talabat's IPO. In our last segment, we explored their market dominance, ambitious growth strategies, and robust tech infrastructure. Now let's get down to the nitty-gritty, their financials. After all, you're not just investing in a good idea, you're investing in a company's ability to turn that idea into cold, hard cash.
Right. As exciting as their growth story is, we need to understand how they actually make money. What's the revenue model here? Are we talking subscription fees, commissions, advertising?
Talabat operates on a multifaceted revenue model, capitalizing on both sides of their marketplace, the hungry customers and the eager-to-sell partners.
So they're acting as a bridge, connecting those craving a late-night snack with the restaurants and shops ready to deliver. And like any good bridge, they're collecting a toll on both sides.
Exactly. On the customer side, they generate revenue through delivery fees, service fees in certain markets, and subscription offerings like Talabat Pro, which offers free delivery and exclusive deals for a monthly fee. Think of it as the Amazon Prime of the food delivery world.
Okay, that makes sense. Customers are paying for convenience and value. But how do they make money from their partners?
Yeah.
The restaurants, shops, and T-Marts.
Their partner revenue stream is equally diverse. They earn commissions on orders, listing fees for businesses wanting prime visibility on the platform, and advertising fees for those looking to run targeted promotional campaigns.
So it's not just about facilitating transactions, they're creating a whole ecosystem of revenue streams. This diversification is a good sign for investors, right? It means they're not overly reliant on any one source of income.
Absolutely. This diversified approach reduces risk and creates multiple avenues for growth. But the question on every investor's mind is, are they actually profitable?
Right. Let's get to the bottom line. All this growth and expansion sounds great, but is it translating into actual profits?
And the answer is a resounding yes. Remember that impressive 96% cash conversion rate we talked about earlier? That means almost every dollar of revenue is turning into actual profit. This efficiency is a key indicator of a company that's not just growing, but growing profitably.
That's music to any investor's ears. But let's not forget, this is an IPO. We're talking about a company that's going public for the first time. What kind of growth trajectory are they projecting? What can investors realistically expect in terms of potential returns?
Now, predicting future performance is always a bit of a crystal ball exercise, but Talabat has some very solid tailwinds propelling them forward. They're operating in a region with a booming e-commerce market, a rapidly growing middle class, and high levels of smartphone penetration.
It sounds like the perfect storm of opportunity for a company like Talabat. But I'm curious, how does their growth compare to their competitors? Are they outpacing the industry, or are they just keeping up?
They're not just keeping up, they're setting the pace. Their growth consistently outpaces the market, and they're showing no signs of slowing down. Their diverse offerings and smart expansion strategy give them a real edge.
Okay, so we've got strong financials, impressive growth, and a favorable market. Starting to sound like a no-brainer investment. But are there any red flags that investors should be aware of? What are the potential risks here?
Like any investment, there are always risks to consider. One potential concern is their reliance on their parent company, Delivery Hero. While this relationship has provided access to technology, expertise, and financial resources, it also creates a level of dependency.
So if Delivery Hero were to face its own challenges, that could potentially trickle down to Talabat. It's a good reminder that even the most promising companies aren't immune to external factors.
Right, and we can't forget about the inherent geopolitical risks in the MENA region. Political instability or economic fluctuations could impact consumer spending and Talabat's overall performance.
It's a reminder that we're not just looking at spreadsheets and growth charts. We're looking at a company operating in a complex and dynamic region.
But despite these risks, I'm sensing a but coming here. But, and this is a big but, Talabat has consistently demonstrated their ability to navigate challenges and emerge even stronger. They have an experienced leadership team with a proven track record of success, cutting-edge technology, and a growth strategy that's clearly working. They've shown resilience and adaptability, which are qualities that investors should find reassuring.
So while the risks are real, their track record suggests they're well equipped to handle them. This is starting to feel like a classic case of high risk, high reward. For investors who believe in Talabat's vision and execution, this IPO could be a real game changer. But before we get ahead of ourselves, we need to consider the human element. In Part 3, we'll explore Talabat's commitment to social impact, their efforts to empower riders and partners, and their vision for a sustainable future. Stay with us. Welcome back to the show. We've spent the last two segments, really digging into the nuts and bolts of Talabat's business, their market dominance, their financial strength, and their ambitious growth plans. But as we wrap up our deep dive on this potential IPO, let's shift gears a bit and talk about something that's becoming increasingly important to investors. A company's commitment to social impact. It's not just about profits anymore. It's about investing in companies that are making a positive difference in the world.
Absolutely. I think investors are really looking for companies that align with their values these days. And Talabat seems to have recognized this shift. They've really woven social impact into the very fabric of their business model. It's not an afterthought or a side project. It's an integral part of how they operate.
Okay, I like what I'm hearing. But I'm always a bit skeptical of corporate social responsibility initiatives. Sometimes it feels like window dressing. A way to generate good PR without making any real changes. Is Talabat walking the walk, or is this just talk?
No, I think they're definitely walking the walk. One area where their commitment really shines through is rider well-being. They understand that their riders are the backbone of their operations, and they're taking concrete steps to ensure fair compensation, safe working conditions, and opportunities for growth.
So it's not just about getting that food delivered quickly. It's about treating the people doing the delivering with respect and dignity. What are some of the specific initiatives they've implemented to support their riders?
Well, they've launched a program called T-Patrollers. It's a dedicated on-ground fleet that provides riders with real-time assistance, operational updates, and even safety gear replacements. They've also established rest areas for riders, especially during those scorching summer months, offering air conditioning, cooling kits, and refreshments. It's about going beyond the bare minimum and creating a supportive work environment.
That's impressive. It sounds like they're genuinely invested in the well-being of their riders, but their social impact initiatives don't stop there, do they?
No, they don't. They're also committed to empowering their restaurant and shop partners, many of whom are small and medium-sized businesses. They provide training on marketing, menu optimization, and how to use the Talabat platform effectively. They even offer access to financial tools and resources to help these businesses grow and thrive.
So it's about fostering a sense of community and shared success. They're not just a platform. They're a partner invested in the success of their network. That's a powerful story to tell, especially to investors who are looking for companies that are creating positive social impact alongside financial returns.
Exactly, and their commitment extends to environmental sustainability as well. They're actively working to reduce their carbon footprint by promoting electric vehicle usage, encouraging sustainable packaging, and partnering with organizations to address food waste. It's about recognizing that their business has an impact on the environment, and they're taking steps to minimize that impact.
This has been an incredible journey. We've explored Talabat from top to bottom. From their market dominance and financial strength to their commitment to social impact and sustainability, it's clear they're a company on a mission to make a difference. And that's something that resonates with investors today.
Yeah, we've uncovered the key factors that make this IPO such a compelling opportunity. The potential for growth, the strong financials, the innovative business model, and the commitment to building a better future. Of course, like any investment, there are risks involved. But Talabat's track record suggests they're more than capable of navigating those challenges.
As we wrap up this deep dive, we encourage you to do your own research. Dig into the details of Talabat's prospectus and decide for yourself if this investment aligns with your goals and values. But what we hope you'll take away from this episode is a sense of Talabat's ambition, their innovation, and their commitment to creating a positive impact on the world.
It's a good reminder that investing isn't just about numbers and spreadsheets. It's about supporting companies that are shaping the future we want to see.
Well said. Thanks for joining us on this deep dive into Talabat's IPO. We hope you found it insightful and informative. Until next time.